And then this is the most important thing. This is the request I get more than anything is this. T-shirts. Oh no, it's not working. We got an error. Oh, here we go. Can you guys see the T-shirts?
Yes.
Throw it in the chat. And like for me, I like interaction. If you can, just throw it in the chat. Tell me if you can see my screen. And then also, who has a T-shirt here that absolutely loves it? Because here's the thing. I get people, I've been handing these T-shirts out for like 7 years. Every time I show up to an event, like people come, they take multiples, they get them for their family. And then I get phone calls later going, hey man, I don't need a mortgage, but I do need another T-shirt. And these things are so comfortable. I hear it from Antonio goes, I got mine on now. They're so, and Antonio's a personal trainer. Like you guys, if you want to get in shape and stay healthy and not get injured, you got to call him. And it wasn't on purpose. These shirts are super comfortable. And then I hear they start conversations. So when you're wearing them out, you're at the gym, you're at the grocery store, people start conversations, you end up getting business. That's how businesses happens, right? You start a conversation, it leads to business. So if you want to come out to the website, it's just jefflagoni.com. I would save that. You can get a free T-shirt. They'll ship it right to your house. And then you don't have to wait for me to get you one. The financing piece of this out here, residential mortgages, we do those. Obviously, that's what you guys refer to me more than anything is residential mortgages. So they come out here, they can complete their application. Investment, because of compliance, I can't say commercial loans, but we do commercial loans, right? So if you have any commercial clients, they can come out here and click on the investment tab and complete their commercial application, and we'll take care of them. And then non-conforming. This is anybody that doesn't fit in the bank box, meaning do they want to do a rent to own? Do they want to do an installment land contract? And if you've heard of subject to, we can structure that for them as well. It's creative ways to get people into homes without going through the bank. The growth zone, you can come out here and click on this and get all the updates going forward. We'll email you when we're going to do it. And then the newest thing is our credit repair. That's what we're going to talk about today. And you can click out here and then it'll bring up, my screen is larger because I can't see so good, so I'll fix this. But you can come out here and schedule an appointment with them as well. So having said that, let's get started. So in the chat, what I want you to do first is tell me why you're here. Like, what do you expect to gain from being here today? Because I want to make sure that Billy and I cover your expectations and cover what you want to learn today. Because I've been doing this for 20 years. Billy is a consumer credit expert witness. When I met him 7 years ago, I thought I was the man with credit. And like credit has changed tremendously. Back in the day, the way the Fair Credit Reporting Act law was written, you have the right to dispute anything on your credit report. You could send in these template letters and then you would get it removed. The game has changed tremendously and it changes and evolves constantly. And Billy's team does that. I've been using Billy since then. So I don't do them anymore. I just send them over to Billy and his team takes care of them. Let's see here. Learn so I can better advise my sphere. Kendra, this is going to change the game for you. I promise you that. It changed it for me for the past 20 years. I didn't realize how many people didn't know this. I talked to improve their credit scores and become buyers. Teresa, we're going to help you do that for sure. And business credit, Antonio, we're going to talk about that later too. So it's something Billy does is establish business credit. And people don't just want business credit, they want funding for their businesses. So he has business funding as well. And Alexis is here to connect and help. And Alexis is going to be your representative that you're going to connect with after this so that you can get started helping more people. So let me give you a screen share here. And I know I'm not doing the full slideshow because I like seeing the screen as well. So you'll be able to see the slide and follow along. But I also want to be able to see everybody here. So can you see my slide?
Yes.
Yes.
Okay. So on this slide, what I want to do is I want to come back to this. Here's a QR code. If you don't already have my stuff, jefflagoni.com is where everything you need. But if you want to scan the QR code, this will give you everything you need as well. I just said, why are you here? You guys threw that in the chat. My hope is that you're here to help families build wealth through owning real estate. And then you're going to be able to help yourselves financially, and we're going to step through that next. But they don't teach us about owning real estate and building wealth. And I've lived it. I'm 54. If I knew at 24 what I knew today, we wouldn't be here today because I'd be retired. I would have bought enough real estate and I'd have had enough rental money coming in or mailbox money coming in that I wouldn't be here talking to you guys today. So let's do the math. Now, on this page, if you're a loan officer, Or if you're a real estate agent, you're an insurance agent, I want you to write down how many applications do you take a month, right? And it's gonna serve a purpose here, but get out a pen and pad, do this math. And it's gonna mean something. There's gonna be a prize at the end for the person with the right answer. So how many applications do you take a month if you're a loan officer? But if you're a real estate agent, how many people do you talk to a month, right? The next question is, out of those applicants or out of those people that you talk to, or if you're an insurance agent, how many people that you talk to, how many don't qualify based on credit score? And in the chat, tell me what you think is a percentage of people that we talk to as a loan officer that don't qualify just based on their credit score. What do you think that number is? And I did this with about 87 loan officers a couple weeks ago, and the numbers are drastically different. Kevin said 25%. Kevin's another insurance agent we refer out a lot too. He does a great job. 35%. Jamie said, yep. 75%. 50. Marlo said, yep. Suzanne Frank said 75%. So for me, that number is somewhere between 40 and 50% consistently. And right now, Tareen said 40% for me. Tareen, this is going to be a game changer for you. So right now we're averaging about 30 applications a month. During COVID, we were averaging about 120 applications a month, right? Now, out of those 30, I'm going to go on the low end. I'm going to say 40% don't qualify just based on credits. That leaves me with 12 people that I would say the average loan officer is going to go, oops, sorry about your luck. I can't help you. Goodbye. I don't ever want to be that person because I live this. I want to be like, not right now, but here's your game plan and we'll get you there. So out of those 12, I want you to multiply that number by 25%. So that's 12 for me, but for you, whatever that number is that you came up with, I want you to multiply that by 25% because this is what I've seen over the past 20 years. Out of those 12, about 25% of those they will do what you ask them to do, right? So when I send them to credit repair, if they do what they're told, they will get the results they're looking for. What happens oftentimes is that they don't do what they're told. They'll get another late. They'll get another collection account. They won't pay down the credit cards like they're supposed to or whatever they're being advised to do. But at least 25% of them will. So for me, that's 3%. That's 3 people. So we come here, that's 3 people. So I have 12 people that don't qualify. 25% will do what they're told. I'm left with 3 people. Now, I want you to figure out what your average commission is. So if you're a real estate agent, what is your average commission? You don't need to share it, but what is your average commission per transaction? And for me, I went into ChatGPT and I said, hey, what's a loan officer's average commission? And it varies. Like there are some people out there making 1.5. There are some people out there making 0.25. But it said the average was 100 basis points. Our average loan amount in Pittsburgh is $270,000, right? It's one of the lower markets in the United States. So if I take those 3 people that got mortgage ready and I multiply it by the average commission, which is $2,700, that's $8,100 a month that you're making just by throwing this in your tool belt. Now, if you multiply that by 12, that number comes out to almost $100,000. That's $97,200 a year, right? That you're losing in your pocket because you don't have credit repair as a tool that you're using for your clients. When I did this the other day, I did it twice. I did it once with 87 loan officers. I did it another time with 7 loan officers. One loan officer said it was $63,000 a year that she was losing. The other one goes, dude, I'm over $100,000. And he goes, I've been doing loans for 20 years. I can't believe I didn't know about credit repair. And then I was talking to a loan officer 2 days ago, and she had shared with me that she lost a deal to credit repair. So she was talking to a customer, couldn't get it approved eligible. Her agent took it, gave it to a loan officer that knew about credit repair. That person did the credit repair, closed the loan. Now, what did it do for the loan officer that knew credit repair? That opened a door to that new agent for a new relationship, right? Because you guys are sending us your referrals as realtors and you're asking us, hey, I want you to take care of my clients and turn this into a paycheck for me. And you have to have these tools. If your loan officer doesn't know about this, they need to know about this. So think about it. What an extra $100,000 do for your family, right? That's a big deal.
Hey, Jeff,
right?
what's a really big deal about that to me?
Yeah.
I'm sorry to interrupt you, but one thing that like just blows your mind is I'm like a business. I'm a black and white guy, numbers. That's with no additional advertising. That's with no additional an extra employee. That's with no additional resources. That's with no additional anything. That's cost you nothing. In fact, it doesn't only cost you nothing, it helps because when I sold houses, I sold over 5,000 real estate transactions. When I sold, I hated saying no, man. I cannot say no. I can't say no to my, I don't like saying no. This made me say, it's not no, it's just not today. So the
Right.
value in that, as opposed to discarding people, went miles for us. But anyway.
No, that's great, Billy. I'm glad you said that. And there's very little effort. It's less than 30 seconds of what you got to do to make this happen for people. So it's not like you got to do the credit repair yourself. Like everything's already done for you. And here's the thing. So I didn't just study credit. I lived it. In the 90s, I was a computer programmer. And back then I was making 100 grand a year. If you look at that in today's terms, I was making $180,000 a year in today's terms in my 20s. So bills are being met. 401ks are getting maxed out. Savings accounts are getting maxed out. I'm handing money to my family. Life is good. I was a computer programmer. The part of the program I wrote was called the work management system. We wrote code for nuclear power plants, raw material companies, transmission distribution companies. And the only way, and then we told all of our existing clients like US Steel and other places, Chevron, that kind of stuff, we said, we're not going to do any enhancements or bug fixes. So we turned down $140 million in revenue because we signed a contract with the Ministry of Defense. And this is back in 1999. We were going to do mobile computing at that time, which was way ahead of its time. The only way the Ministry of Defense gets out of the contract if a war breaks out. 9/11 hits, I get laid off. I knew I was on the chopping block because I was one of the youngest people in the company and I was getting paid a ton of money. I get laid off. Two of my buddies have a mortgage company. They're like, dude, you need to come do this. We're making $20,000 a month. You're going to love it. It's easy money. I hop in there. I don't make more than $18,000 a year. Not saying these guys were shady, but man, that was the wild, wild ones. There was some crazy stuff going on back then, and I just couldn't do it. So I was helping friends and family, and I was helping other loan officers because I was learning mortgages and I'm teaching everybody in the room, but I wasn't getting paid like a manager salary or anything on top of that. So my credit went from perfect to garbage. My score was less than $500 to the point where if you know Cannonsburg well and you know where Sarah's Candies is, I lived in the apartment right next door at that steelworkers union paying $300 a month in rent. I couldn't even afford that to the point where who knows what a repo guy is? Like if you can throw that in the chat, do you know what a repo guy is? I was hiding my truck from the repo guy all throughout Cannonsburg because they were coming for my truck because I couldn't make my payments. My son's born in 2004, and I'm like, do I feed him or do I pay the interest on these credit cards and all the other debt that I had? I fed my kid. By 2007, I ended up getting my mortgage business to a point where I could pay everybody off. I didn't claim bankruptcy, but I paid all my debt off. Even to the point where I had a Chase credit card that originally had a $6,000 balance. With penalties and fees, they jacked it up to 12 grand. And then they settled with me for $6,000, but I had to pay, I got a 1099 on that $6,000 difference that I had to pay on my tax returns at the end of the year, right? So I lived it. And by God's grace, I got an advertisement to come to a credit repair class in Pittsburgh, kind of like we're doing here today, teaching you guys this stuff today. I went to that class in person. The guy leading the room goes, how do you know so much about credit? And I'm like, I'm living it. And I made a promise to myself that if I ever get through this, I'm going to help other people navigate this and get through it because I had no idea what I was doing. And back then, there wasn't YouTube, there wasn't TikTok, there wasn't all these online influencers that go, here's how you fix your credit, which I wouldn't trust the majority of them anyways because there are a ton of shady credit repair companies out there that don't do a good job. Billy's been doing this for 20 years. I did this for a while and I did it at a high level and got results. Billy gets better results than me. That's why I started using him like 5 years ago. I just ship them over to him. So I don't say this because, hey, I studied it. I say this because I lived it. And my answer is never no. It's always not right now, but let's help you get there. So what did this do for me? My credit score went from down below 500 up above 700 in 4 months. I'm able to buy a house now. So a buddy of mine grabs me and goes, hey, man, you can't raise that kid in an apartment. I'm like, watch me. I didn't know what owning real estate would do for me as a net worth. He goes, dude, you need to own a property. You got to stop throwing away money on rent. He goes and buys a place out in Cecil. He goes, can you move into it? I'm like, dude, I can't pay more than $400 a month. I'm struggling to pay $300 a month. He goes, just pay me $400 a month. The next year, he goes, can you buy it? And I wasn't even ready to buy it. And I don't think anybody's ever ready to buy, but he forced me. He like grabbed me by my neck and goes, you're buying this house. I bought it for $145. That's what it appraised for in 2008. And I'm sharing this with you because I'm not like, hey, look at me. I'm sharing this with you because this is what we could do for other people. And the win isn't buying the first property because that's not an asset, right? That gets you in the game. The real win is buying the second one. So I bought this one in 2008. It's now worth 392. It just had it appraised. I owe $85,000 on it, and I get rent off of it for $2,500 a month, and my mortgage payment's $1,000. So I get $1,500 a month in mailbox money. The property's appreciating at about 3 to 5% every year, so you're looking at like $12,000 to $15,000 increase in appreciation. That's like throwing money in my savings account. And I bought it in 2008, 2014. I get married. Her and I both buy a primary residence together. We both keep the places we were living in, and we rent them out. I didn't even know what I was doing at the time, but I know now that's house hacking. I stumbled on it, but these young people that are buying houses now, and I'm like, look, this first one, it doesn't have to be your dream one. Just go get in the game, live in it for a year, 2, 3, whatever, move out, rent it out, go buy the next one. If I knew this at 24, I'd have done this 5 times, right? And I would have $15,000 a month in rent coming in and a ton of mailbox money. So the next slide is the win isn't buying the first house, right? It's buying the second one. Now, I want to give you a real life example. This happened last year. Can you guys see the screen? Is the print really small, or can you see at the bottom what it says? Can you throw it in the chat? Can you see that? Can you guys see that, or even just say it out loud? Yeah, you can see it. Okay. So on the bottom, last year I had a friend of mine call me in February 2025. He goes, hey man, and he's my age. I want to buy this farm. This thing is a dream farm for me. I've always dreamed of owning a farm, man. I got to have it. He's got a 575 score. If you look, he's got a 572 at Equifax, a 575 with Experian, and a 580 with TransUnion. I cannot get an approved eligible through the online underwriting system. I go, let me get you over to 700 credit. If you look on May 29th, 2025, what is that? 3 months and 13 days. His got a 746, a 738, 739, 733. Bought the farm. He closed on a $700,000 farm, right? Now, if I don't know credit repair, his dream doesn't come true, right? So this is what you can do for people. So what is 700 Credit Solutions? Billy Alt is on here. He's our special guest today. I'm going to read this definition to you because this is what Billy does, right? This is the credibility he brings to the table. He's a consumer credit expert witness. There's somebody who has extensive knowledge about consumer credit laws, which 80% of America doesn't even know their rights and their laws as a consumer, credit reporting, credit scoring, repair practices, and is qualified by a court to provide expert opinions in legal cases. And Billy, with that said, like, can you share like what you've testified to in court cases, like without divulging too much information?
Yeah, I can, some vague stuff.
Yeah,
I
yeah,
have a
yeah.
mortgage company that like right during the COVID stuff when we saw the rates increasing like crazy. We sat down and I did a portfolio review, for lack of a better term. We looked at over 400 clients of people that they were getting ready to close in the next 10 days, but the rates had went from 4 to 8 or whatever. I'm making that up, right? So what the determination was, if we can catch like 22 points on the average on every one of these people, everybody gets the next tier down or whatever, and which we did, and we found that, and so we made a game plan, and it was so stuff like that, or I'm licensed to give my opinion, testimony, to write letters. I write letters for divorce cases. Stuff like that, or big banks often get sued for credit reporting, unscrupulous credit reporting when, my score dropped because Bank of America showed my card maxed out when it was not. No, your score dropped because you're 90 days delinquent on a mortgage payment. That's why your score dropped. And it is what it is. The interesting thing about credit reports, the credit report, FICO does not have a memory or a history, nor does the credit bureau. The big three, they don't keep our data. They don't keep yesterday's data. Credit monitoring does. You can access it through sites like My FICO. They keep it and store it and all that stuff and track it. But as far as FICO, what's really disturbing is you can have a 20-year account all of a sudden get negative and then fix it, but you won't regain that 20 years of momentum that you have. Yeah, now it's good and it stops the bleeding, but FICO has no memory. So
Yeah.
and there's no proof of that stuff. So I help cases like that whenever there's, unscrupulous reporting is what
Yep.
people are saying.
Hey, slow down.
That's good stuff. So, in simple terms, he's a specialist who can explain complex credit issues to judges and juries. He can testify on topics such as how credit reports and credit scores work, whether credit bureaus, that means Equifax, Experian, and TransUnion, are following the law, the Fair Credit Reporting Act law. And we'll get into that. Billy's going to talk about that in a minute. Whether a debt collector, and we all, like, if you've ever had a collection, you've seen it happen, right? Like, you got a collection, and then they sell it to another company, and then they try to collect, and then they sell it to another company, and they try to collect. And this thing will go on in perpetuity. And there's so much legalese that Billy's company does behind the scenes, and I don't want to speak to it because I can't speak to it, but half the stuff they're doing isn't even legal. So that's this line here where whether the debt collector violated the Fair Debt Collection Practices Act, whether a credit repair company acted properly or deceptively, how an error on a credit report, like Billy was talking about earlier, affected the consumer's ability to get a loan, a job, or insurance. Who knew on here that your insurance, your home and your auto, depend on credit scores, right? So a better credit score is going to save you on your premiums, right?
In some states.
Yeah. And I'm going to get into that on the next one. So, and then whether a lender's actions complied with applicable consumer laws. The next thing is, Billy, can you speak to this slide here? So the thing that jumps off the page here is inaccuracies. Now, if Experian, TransUnion, and Equifax were private companies, they'd all be out of business. But somehow, some way, they can have inaccuracies on their credit report, which harms the consumer, and nothing happens to them. I think, like Billy and I were talking before, they get like a slap on the wrist. And like 25% of the consumers out there have such inaccurate data on their credit report, they're denied credit, and they don't even know it because most people aren't monitoring their credit, they're not reviewing their credit, and they don't even know the mistake if they saw it because we're not taught how to read a credit report growing up. Like I learned it when I got into the mortgage business, and that's why it's so critically important. And before I forget, Billy and I built out an intake slide for you, right? And if you want it, we can send it to you. Just let us know. It'll literally take 5 minutes for you to walk through it with your clients first. So you can look like the expert, see where their credit stands before you take them out looking for homes. I can ship that out to you as well. But Billy, can you speak to the slide for a couple minutes?
Yes, I think there's a couple people in the waiting room, first of all. And then,
Oh,
so the state of credit in your industry today, credit rejection is at a 10-year high. That's a fact. That's the fact. Nearly 48% of Americans have been denied for a financial product in the last 12 months. Credit card, mortgage, 7-Eleven credit card, any type of loan or card. 34% of credit reports contain errors that suppress scores. That number is actually now over 40%. One of the things that my company does, I have a relationship with 7 different attorneys. Actually, my middle son's an attorney also, but I have a relationship with 7 attorneys, and we're at 41% of the reports that I look at. They have a violation, a serious enough violation that it's a $6,000 fine. Typically, the fines are 1,500. If you have one, you have four because of the 3 bureaus and the original creditor. So that's another service that we do. I don't charge a retaining fee for my clients, none of that. It's part of our deal. And we scan as soon as we intake a client, we scan the credit report for violations, and then during the POP process, we're doing it as well. 1 in 3 borrowers say they avoid applying with you to buy a house because they think they'll be denied. Wrap your mind around that. I have people that come to me every day and they say, "Hey man, I was dealing with Troy down the street and I told him I had some credit issues, and he said, well, yeah, man, maybe you can get a cosigner or put 100 grand down, and neither is an option. So anyway, I drove by and I saw your sign and I was wondering if you can help me." And we said, "Yeah, man, blah, blah, blah. What's your score?" And they go, "It's a 594." And I'm telling you right now, inside of 30 days, that customer's a 620. You know what I'm saying? So it's mind-boggling that there's that many people that have that many issues, but there's that few people that have that many solutions. So 40% of reports contain an error that suppress scores. 1 in 3 borrowers say they avoid applying, and then the average U.S. score, first time in history, it's dropped because we're over $1 trillion in consumer revolving debt. So revolving debts killed this country's credit scores. We're down to like almost close to a 700. Most of the stuff on Chat GPT and Google will say still 714, 716. That's not accurate. It's getting closer to getting below 700 for the first time 30 years probably.
Yeah, thank you for that. And the other thing is, credit score never hinders me from having a conversation with people. I had somebody reach out to me on Facebook a week ago. He said his credit score was like in the low 500s. He's like, Jeff, should I even apply? And I'm like, let's have a conversation, right? Because I'm going to get him there. Like, and there was one lady I talked to in 2012. She closed in 2020. And she's like, Jeff dreamed the dream of home ownership with me for 8 years. Like, I'm never going to give up on you. And we're going to give you a game plan on how to get there.
The
So
national
this
average is 62%, Jeff. People that can't qualify is 62% in the mortgage business. That's credit or income.
That's the average number of people that can't qualify.
62% of people cannot buy the apply get turned down for one of two things: either credit score
Yep.
or income.
Yeah. And for me, like, and I was talking to a bunch of loan officers the other day about this, and I was like, so we know AI's here, right? I saw a mortgage done in 5 minutes, like 5 years ago. And, you know, if it's perfect credit, 20% down, everything's clean, you can hook it in, it'll do it in 5 minutes. Now, if we want to stay relevant in this business, working with this is going to help you stay relevant, right? Like the credit repair, like the credit challenge people, like walking through that. You get somebody fixed up credit wise, they're loyal to you. Like, and we know loyalty's gone out the window when I got in this business, loyalty was a thing, but loyalty is not a thing today. And our customers are getting pinged left and right by the servicers. So if you're not standing in front of them, you're losing them. Now, if you can go serve the community that needs to hear this, right? And these are the people that really need to be building wealth, because nobody's teaching it. Like it's usually generational. Like if I'm being honest, like your mom or your dad has to teach you the stuff, or an aunt or uncle has to teach you the stuff, and it's not being taught, right? Even though there's YouTube and there's TikTok and you can learn the stuff, but who do you trust out there? So why scores are so often wrong? 1 in 3 are so inaccurate, or it's obsolete information. Like there are so many inaccuracies on credit reporting, and this is why credit repair is a great thing, because it'll get your credit as accurate as it should be and as clean as it should be. 25% of the consumer errors are serious enough to affect an approval, which I talked about earlier. Disputes are resolved inaccurately or incorrectly by the bureau the first time, and 80% of consumers don't even know they can force the bureaus to verify the accuracy of the Fair Credit Reporting Act. So this is part of the process. Now, I just want to go to the basics and talk about credit. Are you guys cool if I do that? I live this all the time. I always take it for granted. I know how credit works, but when Jenny, Melanie, I sit with a client in the beginning, we talk to them, we go, hey, do you know how credit works? And they're like, I think, and I'm like, well, let's walk you through it. It's pretty simple, but I want to walk everybody through it here. There's 3 major bureaus, right? Equifax, Experian, and TransUnion. Now, for us, our grid as a mortgage company goes from 350 to 850 being perfect. When somebody calls me and goes, I got a 900 credit score, I go, they must be looking at a different grid with a different algorithm. It could be a 500 to 1,000 algorithm. But for us, just know this. And I'm going to show you what the cost of this is too. For a 760 and above, that's excellent. You're going to get the best of everything. For every 20 points you go below that, you start taking a hit to either the mortgage rate or the cost of the rate. So when you see somebody at a 620 score versus a 780 score, the rate's going to be drastically different. Even though they called on the same day, there's what's called loan level price adjustments. So anything above a 760 is excellent. 720, 760 is like good. 680, 719 is average. 620, 679 is fair. 619 below is poor. I tell everybody that calls me with a 639 score or less, it's a scratch and claw. Like, we will scratch and claw with you. We will try to get you in this house. If I call you the night before closing and tell you don't qualify, you can't call me an idiot. And I just hope we're friends at the end, right? Because we are absolutely going to terrorize you the whole way through this process, because it's not easy when your credit score is that low. They're going to turn over every rock. Now, we have people to scratch and claw with us, and Jenny's witnessed it, right? She's first joined my team. I told a guy we're going to scratch and claw. And during the process, as we keep asking for more stuff, he goes, you did say we're going to scratch and claw. He goes, I'm scratching and clawing with you, brother. Let's get this house. And we got there, right? But it's got to be communication. It's got to be setting that expectation up front and then scratching and clawing alongside of him, and then letting the realtor know you're our advocate as well. And here's the way we operate. We're going to ask your customer for stuff. If they don't reply within a day or two, we're telling mom. So we're going to tell you, your kid isn't getting us what they need. Can you help us? Right? And then we're going to work as a team to get that stuff in here. Now, here's how credit works. So the 35% of your score is paying your bills on time, right? Which oftentimes people are like, hey man, I'm paying my bills on time. Why aren't my scores higher? Well, the next most important thing is the balances on your revolving debt, meaning your credit cards, your department store credit, that kind of stuff. Ideally, Millie and I were talking about this the other day. I said, ideally, you want it less than 30% of your limit. So if you have a $1,000 credit card, ideally, you want it less than $300. Now, these creditors don't report to credit bureaus in real time. Like 80% of them report on like the 27th day of the month. The remainder report on like the 5th and 7th day of the month. So whatever your balance is on that day is what's getting reported. Now, Billy, can you speak to this? Because you said something about having 10% versus less than 30%. Then you said something the other day about having 1%. What does that do for your credit score? Can you speak to that piece on the capacity piece?
So you on utilization, on revolving utilization, 30%'s good, 10%'s better, 1%'s the best. 100% is horrible. Over the limit's terrible. Over 50%'s bad. So like the real numbers are 30%'s good, 10%'s better, 1%'s the best. People with an 800 credit score have a 1.25, 1.27 utilization. That means they use 1%. They got $100,000 worth of credit cards, they're using 1% of it. And if they got $1,000 worth of credit cards, they're using 1% of it. But if you got an 800 credit score, you don't have, you have, you've got
Yeah.
$20,000 worth of credit cards. So
Yeah.
1%'s the magic number.
And even going back 15 years ago, I had a customer
Eight,
call me with a 521
I,
credit score. And the agent was like, he's been denied by 7 lenders, Jeff. Can you see what you can do? He had a $300 credit card maxed out with $300 on it. And I looked at it. I'm like, buddy, if you paid us down to $10, your score is going to pop over 640. We can do FHA. He pays that $300 card down to $10, not to zero. We do a rapid rescore. His scores pop to 641. He closes FHA. Right? Like your lender needs to be knowing this stuff. This is what we do too. This is part of our process. So that plays a factor. The next thing is length, your average length of history. And I'm going to give you a math problem. And I want you guys, Dan said also, there's a lot of guys like me who don't have bad credit. I haven't bought anything I haven't bought anything on an installment payment in 10 years, paid in full purchase, have no credit, good or bad. Yeah.
we have a
So
great credit builder program that instead of having people, have to go out and get a bunch of secured cards and all that, we have actually a program we charge like $600, I think. And we literally walk them down, sit them down, give them every link to open, what order to open. What FICO has a strong distaste for are too many open accounts in a short period of time, inquiries, length of credit. So by opening an account, you're destroying all that. And
yep.
then you're affecting your credit score negatively like 40%. Jeff, you'd mentioned, and we didn't talk about it, but you'd mentioned about the statement cutoff date. So also,
Yeah.
if you are, like for me, I may use my Capital One or whatever for paying the company's bills, but then the company pays it off or at the end of the month, whatever the case may be, personal, whatever. So if it's Capital One, and I like American Express because American Express doesn't count on revolving utilizations. It's a charge card, not a credit card. But if you call Capital One and say, hey, when does my statement cut off? They're going to say the 29th. Okay, cool. So if I'm going to pay off my debt, my credit card in full, I would call the day before the statement cuts off, the 28th. I'd say, hey, we'll get my balance, and then I would pay it off. So that when the statement cuts off tomorrow, the balance is zero or $100, whatever. That's what's going to get reported to the credit bureau. Then that shows up 30 days later. But if you pay your debt, and I don't do it every month, but if I'm fixing to go buy a new truck, a house, a car, or whatever, and somebody's fixing to pull my credit, then yeah, I'm gonna make sure that I pay that off early this month and get a zero balance, if that makes sense. That's another little trick.
No, that's good. The other thing I was going to say is the third most important thing on your credit is the average length of history. So I'm going to give you a math problem, and you can throw your answer in the chat. If the ideal average length of history that you want is 6 years, that's the ideal average length of history that you want credit open. So if you had one credit opened for 6 years, what would be your average length of history?
And you don't think this is a big deal, but here's where this comes into play on thin files or new credit or length of history. When you have a maxed out card with a short length of history, it's bad. When you have a maxed out card with a long length of history, it's not so bad. So all of this ties into each other. Like collections with inquiries are worse than inquiries with no collections. Slow, you know what I'm saying? So what happens is before bankruptcy, people max out their cards, they get new inquiries, they get slow pays, then they file bankruptcy, charge off, then it bankrupts. So all the algorithm, the machine is doing is pumping the brakes and waving flags saying, hey man, hang on just a minute. We got a brand new guy over here with a maxed out credit card at $300. That's a problem waiting to happen most likely, and it's incredibly accurate.
So to that point, like on the average length of history, if you had one credit card open for 6 years, what would be your average length of history? Can you throw that in the chat? Can anybody do that math? And I want to walk you through this for a reason. Now, if you open up another card, right, and you have two cards now open for 6 years, what's your average length of history?
Wow.
So the first answer was 6. I don't think we got any math wizards in here. Nobody's throwing it in the chat. So the first answer was 6. The second one is 3. So your average length of history went down, your score drops. And then oftentimes people will do this. They'll play the interest rate credit card game. And what do I mean by that? Well, they got a 0% interest for 12 months. After the 12 months is up, they get a new 0% interest rate card. They transfer the balance and they shut down the old card, and their score just dropped 100 points. And they never missed a payment. And they're like, Jeff, I don't understand why my score dropped. Well, you open up a new card, which dropped your average length of history. You shut the old card, which dropped your average length of history. You transferred a balance, and it was probably more than 30% of the limit, which dropped your credit score, right? So when people are playing that interest rate game, yes, they're paying less in interest, but they're damaging their credit score. You don't want to do that anytime you're getting ready to buy a car, apply for insurance, or get a mortgage.
And the only time this doesn't really apply is if somebody has like an 800 credit score, 780 credit score, and they have one account, at least one account that's open, that's 20 years old. It almost, you can go open 3 or 4 credit cards right now, and it's not going to hardly change anything at all. So the algorithm is so smart that whenever it sees a bunch of when it's starting out, if it's an open account that's still open, it reduces the effect and the factor that the newer accounts have on the score. It's really fascinating, to be honest with you. But that's why, your grandparents have 800 credit scores and they play that game. They play the no interest game when they have to or whatever because they can. But as people as the score as your social security number matures, like that changes. You know what I'm saying? It gets
and then the other piece I want to talk about is the combination. I learned this from Billy too. So for every installment loan you have, and an installment loan, I mean like a mortgage, a car note, student loans, that kind of stuff, like it's a fixed payment over time. That's an installment loan. You should have 2 or 3 revolving credit cards. Who knew that? To have a perfect credit. And Billy, can you speak to that piece? Like, I didn't know that. Like, I didn't know you're supposed to have like 2 revolving debts for each
So
installment.
your perfect mixture should be 2 revolving, 2 to 3 revolvings, 1 installment. 2 to 3 revolvings would be a Visa, a MasterCard, and a Discover. And then all of a sudden I have a $47,000 truck note that I paid down to 20,000. FICO loves that equity. And also on installment credit, utilization's a real thing. So the lower the utilization is on an asset, the better it is. Jeff had a customer the other day closed their credit score, paid off a car a couple months earlier or whatever, and the score dropped 30 from 730 to 700, which is that's a huge deal because now he goes from an A plus to an A. So when we're educating, the reason we like talking about this, y'all, is because when we're like my staff, when Alexis is on this call, she educates the customers of this. Honest to God, manipulating the FICO score is playing a game of sitting down playing chess with the system, not checkers. I can play checkers and get a deletion, get a deletion, get a deletion, but that's cool. What really makes a difference is I'm gonna sacrifice this deletion right now for a violation, and then I'm going to offset that. I'm going to get them to make sure that we do open up this installment account. Like we have an installment company we work with. It's a little $50 account. The customer pays in $50 a month. It's $600. It goes into a savings account that reports to the credit bureau, and they get the money back less $30. So home run, man. So like we have a lot of chess pieces that we can move and manipulate.
Yep.
I'm not doing credit repair out of my mom's basement.
Right.
You know what I'm saying? Like, it's not like that. We sit down with these people. I say that a lot. Like we educate them. We hold their hand and walk them down the path of home ownership. That's what my job is.
Yep. And I love that. And so this next one is, why is credit important? And I don't know if you guys were aware of this, right? So employers are going to look at your credit report. Lenders, obviously, we're looking at your credit. And I'm going to show you what the difference is between good credit and bad credit on a mortgage. Government agencies are going to look at your credit. Utilities. So I just had somebody that I referred to get solar panels on to save on their energy cost. The solar panels are free, But they pulled credit, found she had a bankruptcy 3 years ago, wouldn't give her the solar panels. I called the solar company. I'm like, hey, the solar panels don't cost anything. Like, why are you not giving her the solar panels? Well, she had a bankruptcy 3 years ago. And if we're going to put $30,000 of equipment on somebody's house, we got to know that they got good credit. They weren't even getting financed. So now she can't save on her energy because of her credit. Now, bankruptcies are something you can dispute. Landlords are going to look at credit. Insurance companies are going to look at your credit. So everything has a financial tie to your credit score. I wish they taught this in high school and college, but they don't. So it's our job as industry professionals to get out there and educate everybody about it. The next one, keys to a new home. On my team, for me, since 2007, the answer is never no. It's always, there's going to be three options. One, we're going to send you to a free HUD counselor if that's the option for you. There are people throughout the state, their full-time job is to get you A to Z, mortgage ready to buy a house. They'll teach you how to budget. They'll teach you your work history. They'll teach you how to read a credit report. They'll teach you how to dispute it, all that stuff for free. Rapid rescores, which I talked about earlier, we're going to look at it and say, what can we do to bump that score to get you to qualify or save more money in a short period of time? The third one is credit restoration, which is what we're talking about today with Billy. And if you look down here at the bottom, I just ran some quick numbers. You would think a 700 to a 719 credit score is a great score. But compared to a 780, that on a $250,000 loan, that person's going to pay $13,000 more in interest over the life of the loan. Now, I see AJ Williams on here. What AJ Williams could do with that 13 grand, time value of money invested in whatever investment he's going to put, dude, that's changing the game, right? Because you're losing that money. Now, if you go down to a 620, that person's spending $73,000 more in interest over the life of the loan just because of their credit score. Same house, they're just paying $73,000 more just in interest. So when I did the calculations back in the day, they'd have me go to Penn Trafford High School to teach this stuff. The average cost, just an average person with an average salary, was about $300,000 that they paid over a lifetime because of having a lower credit score versus a higher credit score. Now, Billy, when you start wrapping in opportunity cost, investment lost, all that stuff, it comes out to the millions. The next slide, it's not your fault. Now, I know when I had bad credit, I felt like a loser. All the phone calls I was getting from collection agencies, like I'm telling people, hey, life happens. It's not your fault. You got a divorce. You lost your job. You got hurt. Something happened, right? People don't stop paying their bills just because they don't want to pay their bills. Like they can't pay their bills. So something happened, and let's help them get through it. Now, this is all the stuff that can be disputed, right? You can dispute charge-offs, collections, bankruptcies, repossessions, inquiries, late payments, tax liens, and judgments. And then the Fair Credit Reporting Act, right? Billy, can you speak to this piece? So my understanding of this back in the day was, and this is how it worked back then, but I know this game has changed so much with online and different ways to challenge things. And what Billy was talking about his company does. Back in the day, the way it was is that you have the right to dispute any negatively reporting item on your credit report. And if they didn't respond within 30 days, it got deleted like it never existed, right? So it flipped the tables. It flipped the burden of proof. Instead of you going, I wasn't late or I don't owe it, the burden of proof was put on the bureaus and the creditors. But Billy, can you speak to this like today and how that works in a couple minutes?
The Fair Credit Reporting Act or
Yeah.
the so anything that reports to the credit bureaus, they have to be 100% accurate, 100% verifiable, 100% timely. Timely being it can't be past the statute of limitations. You have up to 4 years to report something. You have up to 10 years to keep it on a report. Bankruptcies, most stuff 7. And it's not, when we verify, when we audit, we don't audit like that's not mine or prove it. No, it's like, hey, you're showing the date of last activity is September of 26th. I need verification and validation and proof of that. And I'll be sitting right here waiting for it for the next 30 days. And if they verify it, we say very interesting. We would not only like to see that method of verification, but I'd also love to be able to for you to verify the full account number on this account just to make sure that we have the right account. So that's, we can ask to see all of that stuff. The bureaus will send back frivolous letters saying this is a frivolous response. Or dispute rather. You're just blanket disputing, for lack of a better term. And the reason they'll do that is verbiage of letters. They scan the letters looking for common word tracks, phrases, words. They will literally look at and scan an envelope and they see a Dallas, Texas timestamp for me, but the customer has a Pittsburgh return address. That's going to go frivolous. So we know better than that. As an expert witness, I know how to get around that. The bottom line is we got to get in the system to be seen. So the first thing we have to do is open an audit, open a dispute, to verify accuracy of certain aspects of the account. What the Bureau does, they immediately put an XO code on the Bureau on the report, and that code converts to consumer disputes, consumer account in dispute. That that account is ignored by FICO for 30 days. On the 31st day, whether it says in dispute or not, that account's ignored by FICO. The only things that are ignored by FICO in respect to those accounts are original creditors. So collections, you can dispute a collection account and it can say in dispute, it's not being ignored. Really, the only thing that's ever ignored when they put consumer disputes, what's ignored is maybe you're disputing the balance on a Capital One account. So I don't have a $10,000 balance. I have a $1,000 balance. That utilization is upsetting my score. So that's a true deal. That's a real deal. We're not wishing for a deletion. After 30 days, either they paid down that balance, life's good, or they didn't. But regardless, it, that account is now being back reported and counted in the scoring calculation. So people get all mixed up on these. Oh, you can't dispute. You have to dispute. You're going
Yep.
to put dispute comments. You have to put dispute comments. If it doesn't say in dispute, then there's no legal. There's nothing formally showing they ever received the dispute. So then people sit there waiting and waiting and waiting, and they say, "Hey, we never, we don't have, we didn't get anything from you." And they being the bureau say, "We never got a dispute. Look, it doesn't say in dispute." Yeah, because y'all didn't put it in dispute. I mean, so the dispute comments, Corey recently had a customer not too long ago. Same thing. I think that we got their score high enough where he could get them approved before we got the comments off, and he underwriting or whatever needed the comments removed. He called us. We have a hotline, so to speak.
Yeah.
We can get dispute comments removed within 3 days. So my girls called, got them removed. Corey repulled credit or whatever, and the score did not change. The customer, I
Yeah.
think, gets closed on their
And
home.
that and
So don't
that's
let those comments trip you up because
yeah.
there's so much bad information about them. It's not even funny.
And that's critically important what Billy just said there. So disputes have to be removed from the credit report, and he has a hotline to get those removed quickly, which helps us, and the score won't drop. Back in the day, we'd get those disputes removed, the scores would drop, and people wouldn't qualify anymore. But he has a hotline to that. So I know we're running out of time, and I want to get you guys out of here, but I also want to get you connected so you can get going with this. So for loan officers and realtors, like, put this into your part of your intake, right? This will make you the expert. You can partner with me, partner with Billy, to be the credit expert before issues arise, educate your buyers earlier, know their score before you tour, host joint buyer education things. Billy and I are both here. If you want to do a joint credit seminar, we'll do it with you. Like I said, we got that handout to get a review with your clients as you sit down. You can add the credit review to your intake process, offer a free credit readiness checklist for your clients up front. You'll be able to help more families, serve and educate our community, which is the biggest thing for me. I wish we would put this in high school classes and college classes. Very little extra work on your part. Doesn't cost you anything to set it up. You're going to get real-time tracking. After Billy's team consults with them, coaches them on how credit works, and if there's any work to be done, you're going to get emails updating you on what was deleted, what their scores improved to, what that looks like, and then you're going to be able to make more money. You're going to be able to close more loans.
And if you guys really
So,
want to dial that in and look at what our intake process looks like and the onboarding process and what we talk about, because what we do is we talk to the client, we go over their wants, needs, and budget and blah blah blah, and what made you reach out today and what are you trying to accomplish and this that. Then we do a free credit analysis, very thorough, very detailed. So if you guys want to see what that intake process looks like what are you doing with my customer whenever they call you? Alexi's on here. You can set up a call with
yep,
me, with her, with Jeff. And also as far as like these types of classes, I love doing. I do them all the time. So I have realtors and LOs that will say, "Hey, let's do one. I want to do it live, and then I also want to record it. Maybe we'll do it Wednesday night at 7 p.m. for 1 hour. We can do something like this or different." But the coolest thing is a lot of realtors will then utilize that as a resource, a digital asset down the road. So when people say, "Hey man, my score's 500," you say, "Hey, no worries. Let me send you this old video. Watch it. We just did a recent deal on that, for your consumers or whatever." So But Jeff and I, we
Yeah.
could create some
And
cool stuff
even
for you.
even the title reps that are on here, like for your loan officers, your realtors, like you want to throw a seminar, you want to do a Zoom, Billy and I will hop on there and walk them through it. So the next thing is get connected, right? I'm going to drop Alexis's information in the chat. Just copy and paste that. Like that's how you get connected. Set up a consult with her. Get your portal built out. Your portal's going to look like this. Tell me when you can you guys see my screen where it says shows the portal intake form?
Yes.
Literally, I have my own portal. I come out here, I put the first name, last name, email, and phone number. I give Lexi notes on what's the story with the client, and then she will call them, and then she'll do a consult with them. If they don't need any credit repair, she doesn't. She just tells them, here's what you need to do: open his card, pay down his balance, you'll be fine. That's the thing I loved about Billy and his team is they're ethical. They're not just trying to make a dime. They've talked to a lot of our clients that they didn't put through repair because they didn't need it. They do the right thing. They also have a homeownership guarantee program that Billy can speak to, meaning if somebody qualifies with work history, assets, and income, but their score isn't there, they have a guaranteed homeownership guarantee that they'll get their score to where they qualify, which is saying a lot. I'm not saying it. That's Billy's, not me. But it's a process that if somebody's trying to do it on their own would take them 2 years, but they speed it up to like 3 to 6 months. So this is something that they do as well. Just so you know, they've been featured on Forbes, ABC, NBC, Fox News, MSN Money, MSN Money, Forbes. So like credible, been around for 20 years. It's a legit business. I've beat down the weeds for you. There are a ton of shady companies out there. This is not one of them. This is a legit company. This is my portal, just so you can see I am doing it, right? I took this snapshot in June. We've sent 90 people in this year. For me, it's a seed. It's not right now, but here's your game plan. They come back ready to go. I call you guys up going, hey, that person you gave me that wasn't credit qualified, now they're pre-approved. Have fun shopping, right?
Plus,
So
what
like,
else is on there, y'all? There's a ton of assets and tools for you guys. Like you can enter the lead through our portal. It goes straight to Lexi. It assigns it to Lexi. We know that's a lead that we know what to do with them. That also starts a workflow. So it drops a voice drop to the client from Lexi saying, "Hey, this is Lexi. I'm with 700. I'm trying to reach out to you," and blah blah blah. And then they get a text message from her. "Hey, this is Lexi. Here's my phone number. Reach out." They get a live call from her. They get an email from her the next day. They get an email from me, voice drop from me, a text from me, a text. So for the first 10 days, we're on them 3 times a day. Like, hey man, don't forget about your credit. So we're on your side. We're trying, time kills deals. We're trying to wrap it up as quickly as possible. You know what? We don't just wait for them to call us. And the thing is, nobody wants to scratch this sore. You know what I'm saying? Like, this is a difficult conversation to have.
yeah,
So just taking the first step, and they're afraid to call Alexa. They're certainly afraid to call Jeff. Jeff's the money man. Jeff's the banker. If Jeff tells me no, I'm dead. My dreams are finished. They're done. So I'm afraid of Lexi, but at least I can get information from Lexi. So the biggest thing is tell you people don't, I mean, it is what it is. You don't have to put your head in the sand and ignore the mailbox. Like open your mail. Don't be afraid of a collect. Like it is what it is. Call Alexis. They're there to help you. No
yeah.
judgment, no shame. Man, that's what we do.
And you bring up a good point because when I was going through it, I felt like terrible, and I didn't want to
Embarrassing.
share it with anybody, and I was hiding it from everybody, and I'm trying to figure it out on my own. And so for me, I just try to encourage people. I don't care what your credit score is. Like my score was probably lower. Like let's get you moving forward, right? And just encourage these people and give them a way forward. I was reading something the other day. It said you could read the Bible as much as you want, or you can learn about swimming, read a book on swimming as much as you want, but you're never going to learn how to swim until you get in the water. So if you want to help your community and you want to help yourself, book your consultation with Alexis. I put it in the chat there. Copy and paste that. Send her an email, and start doing this. Start
And
referring your
people
people
love it.
in. Yeah,
People
start
love it.
seeing how this works. Yep.
For you as
Um,
realtors, title companies love it. Mortgage guys love like you're bringing value and to them. You're bringing something to them. But because right now nobody wants to talk about it. It's like, oh, they got bad credit. Let's not even discuss it. It is what let's discuss it. That's what needs to happen.
yeah. So a couple things I want to make sure we covered. The disputes, once they get removed, scores don't drop. As a loan officer, that's gold. Um, Oh, Billy, can you speak to if they do something illegal on your credit report, the money, the lawsuits that could be in it for the consumer?
So we have a team that of attorneys. They're an FDCPA, FTC, FCRA. They're a credit reporting firm. They sue credit bureaus and collection companies. So whenever the collection companies get their bond, when they get bonded, they have certain things that they have to do, and what they can be fined for breaking and for breaking the reporting laws of the Fair Credit Reporting Act or the Fair Debt Collection Practices Act. Two different things. Debt collectors follow the FDCPA. Unscrupulous debt collectors cannot, call after nine, threaten that they're an attorney, threaten to sue you and not. Whenever they send you a letter, or when they assume a debt, they have to validate the debt, showing who they are, how much they paid for it, when they bought it, blah blah blah. None of them do it. None of them do it. If they do it, they don't do it certified. So, um, yeah, there's just a lot of
Yeah.
different angles like that as
So
far as that.
there's so there could be a lawsuit in there. There could be a fine, and your client
Yeah.
can end up getting like $1,000. Is the
And
point?
then
So yeah,
when we take care of that, not only do because what happens is like let's say it's 1,500 to 2,500 per incident. There's usually two or three incidents, believe it or not, and then four bureaus. So the attorney may make 10 grand, and then the customer gets 1,000 of it. But that's a
yeah,
thousand they never had. They didn't pay
yeah,
a $10,000 retainer, and the debt's now made whole. If Jeff comes to me with a $20,000 repo and I make it disappear from the credit bureau, nobody knows about it, he still owes the money. The money
right.
still, I didn't go pay it for him. But if it's inaccurate reporting and we get a fine, he not only gets some money for pain and suffering, and it pays
Yeah.
immediately. Or, I mean, it pays quick. So yeah.
Yep. So the other thing is this: if you guys want to do a mastermind call on this, like I will show you how I'm using it in my business. I'd say shoot me a text message or hit me up with an email, and we'll do a separate Zoom, and it'll be practically like how do you market this? How do you practically apply this to your customers and your business? I just did this last week with another group, and they were blown away, and I was shocked that they weren't farming their database and digging through their database the way I showed them to. Business credit, business funding. We don't have time to get into it right now. We're almost out of time. I only got a couple minutes here. But if you have a business and you want to establish business credit, get business funding, that's something we can do as well. Let's connect on that one.
While we're on that real quick, Jeff, I
Yep.
always have a ton of people afterwards will hit one of us up and say, "Hey man, we'd like to see, let us try the program. I got a few things I'd love to get taken care of myself." So our prices, we charge 1,500 for one person, we charge 2,250 for two people. It's 200 down, 200 a month for one person, 300 down, 300 a month for two people. So it's not that much, 150 a person if it's a couple. 6 month program. It usually only takes us 90 days. The first 3 days is where we always see our best results. But for our referral partners, anybody who wants to sign up with us, instead of 1,500, we do 1,000. We knock 500 off. That's like my friends and family discount. You can do payments on it, 150, $200 a month, whatever. And then also my business credit program is phenomenal. It's a 6 step program. I sell it for $3,500. And with credit repair, I sell it for 1,000 to my referral partners. We do it for $500. That's what
Wow.
literally my cost, and
Yeah,
it
yeah,
is.
yeah.
And Jeff and I are making a penny on that. But anyway, for business credit, if anybody on this call, if you're an affiliate with us and you sign up with Lexi, then if you're like, hey, I want to try this out. Business credit, you can get our business credit program 500. You can get credit repair 1,000. You can get it all bundled together and do payments, whatever. But a lot of people ask that question.
Yeah, and I put this out here. Like again, if it's one person, it's $100. It's $200 up front to get started, then $100 every other week for about 6 months, and then anytime you add somebody, they're half off. So we haven't had anybody complain about the cost. The cost is in line with everything. There are shady companies out there that will charge you 150 for life until you say uncle, and they'll bleed you out.
If they don't pay at least $200 a month, you'll never get that customer back. The $75 a month, the $50 a month, the 129 a month, you'll never get that customer back because that payment plan was designed for an 18-month payout. You'll never
Yeah,
get that customer back.
yeah, they get results, and I've been using them for 5 years. So the last thing, just leave you with this for the prize of the day. If you're willing to do it, the right answer is how much money are you leaving on the table by not having credit repair in your system? If you throw your number, if you did the math earlier and you throw your number in the chat, you'll get your prize. Kevin Strauss is the first one, my man. Kevin, you get a free Lagoni Mortgage T-shirt. I'll give you your QR. I'll give you your coupon code, and then you can wear it proudly. Any questions for us right here, right now? Everybody good? Okay. If you have any questions, reach out to us. Book your time with Alexis, and then we'll see you on the next one.